Well, hello everyone, and welcome to XPON's full year FY22 results webinar. My name is Jane Lowe, and I'm the Managing Director of IR Department. Pleased to support XPON on investor relations and to also be your moderator for this session today. So here with me is XPON's Matt Foreman, who's founder and group managing director. Morning, Matt.
Morning, Jane. Morning, everybody.
Morning, and we've also got Leanne Wolski joining us, who's XPON's CFO. Good morning, Leanne.
Good morning, Jane, and good morning to everyone.
Thank you for being here. Okay, so the format for today is that Matt and Leanne will walk you through the FY22 full year results, which were released this morning to the ASX. They're also up on the XPON website at xpon.ai. Should take around 15 to 20 minutes to get through the presentation content, and then we'll run through a 10-15 minute Q&A session. A reminder, if you'd like to ask a question, you can do so using the Q&A function in the ribbon at the bottom of your screen, and you can do that at any point in time. And with that, I'll pass the floor over to Matt, ask you to start screen sharing and get us started. Thank you.
Fantastic. The screen shares come through there, Jane?
Yep, got that. Thank you.
Great, thank you, and good morning, everybody. Very excited to share what is our inaugural annual results as a publicly listed company. So as Jane said, we'll probably spend about 15-20 minutes talking through some of the performance and the results, and then we look forward to some questions from everybody. So to start us off, just really to frame up very, very simply who XPON is and what we do. The simplest way is to describe it as we help businesses make sense of their customer data, and we use that then to help unlock exponential growth for those organisations. And you've seen this year with our financials that positioning in the market certainly is resonating as we continue to land new customers and expand those customers over time. Excuse me. And so one of the really strong drivers of demand for XPON is this convergence of a number of macro trends. Privacy and security is a key driver for us. Particularly in the digital advertising world. You may have heard or read a fair bit about this issue around third-party cookies, which is technology that's used to track what consumers do online. That technology is going away over time. Most of the vendors have already deprecated that and made that go away. Google still has that available through their Android and Chrome technologies. They were planning on degrading that in 2023. They recently announced about a month ago, I think, that they're extending that deadline now till the second half of 2024. So that is good for XPON because it does provide us more time to work with our customers to make sure that the industry is prepared for what is one of the biggest fundamental shifts in how the internet actually works from a technical perspective. So that's providing a lot of demand and interest in our solutions. The other part that's really driving a lot of interest for us is really on the consumer side. So consumers really do demand very personalized, frictionless digital experiences. There's a bit of a balancing act there because they want their information to be private and secure. They don't want it to feel creepy, like you're following them around the internet and know too much about them, but they do expect that experience to be really personalized. So that's another key driver for growth for XPON. And then fourthly, is this sort of increasing sort of awareness and interest around extended reality or the metaverse. And XPON feels like we're very well positioned with our Holoscribe platform to capitalize on that in the future as that becomes more and more of a mainstream in the way the internet actually operates. So we've got these convergence of these trends that are really driving the demand for our solutions. How we're structured around that, we simply have two business units, XPON Technologies, and that's our business unit that deploys all of these technologies and helps our customers with strategic enablement to get the most out of that technology and really drive that exponential growth in their business. And then we have XPON Platforms, which is where our two proprietary technology platforms live. We've got our customer data platform, which is Wondrous, and I'll talk to Wondrous in a little bit more detail shortly. And Holoscribe, which is our extended reality platform. And we've got some case studies to talk to about Holoscribe shortly as well. So just to sort of paint a bit of a picture where XPON sort of sits in the industry, there's lots of different ways that customers extract value from our technology and from our capabilities. I think this diagram, the way that I sort of look at it, it's a little bit like a subway diagram, and you have all these different needs of an organisation, which are little stops on each of the railway stations on the subway. And how XPON provides value there is it enables us to provide, I guess, a single view, a holistic view that's very secure of a customer that can be used across the organisation. Now, typically these little stops on the train stop have different teams, whether that's marketing or operations or IT, that are responsible and accountable for these different areas of the business. XPON unlocks value across the entire organisation, as I said, in a very secure way. What that means, and just to talk to a basic use case, is if our customer has a need, let's say digital advertising, and they want to activate and use their data to drive more effective advertising, a customer can start working with XPON at that point in digital advertising. They can deploy our technologies and our capability. We prove value very quickly. We do that incrementally for them as well. And as the customer gets confidence in the capability and see that return on investment, they then start to work with us and expand their relationship with us across all those different areas in that diagram there. So we feel we're very well positioned to continue to grow our existing customers and continue to land new customers in these different areas where we create value across that entire industry value chain. So I often get asked what XPON's strategy is, and I think this probably is the most simplest way to describe it. We feel we have a once-in-a-generation opportunity here with this convergence of these technology trends, and that's really creating the demand for us to land customers. Because we have the right technology and the right people in the right place at the right time, we're able to expand those customers. Now that's powered by very, very strong unit economics. We'll talk to some of those shortly as well, but we feel we have world-class unit economics, which actually delivers very strong underlying customer profitability. So as we continue to execute on our strategy and grow our business, that's what's delivering the operating leverage as we work towards targeting that cash flow break even for full year in FY24. And I just want to be clear on that too, because for us, we think that we've got another year of investment in the business in FY23, and as we move into FY24, we'll feel we're in a very good position to achieve that cash flow break even for the full year in FY24. So some of the key financial highlights, and we've already pre-announced all of these numbers at the end of our quarterly results at the end of June as well. So I won't dwell on them too much. Needless to say, we've had very, very strong growth rates across all those key metrics, with our ARR increasing 78% year on year, our revenue up 145% year on year, our gross profit up 169%, and we've continued to expand our gross profit margin, and that's up 6 percentage points year on year as well. So this is a view, I guess, of our half on half revenue, gross profit, gross margin, and you can see that strategy around landing customers and expanding customers is really driving a really nice exponential growth in both our revenue and in our gross profit. You can see in those purple and blue bars there, it's just consistently building quarter on quarter, and our gross profit margin is continuing to track towards our targeted range of 70 to 80% as we continue to increase the product mix of higher margin products that we deliver to customers and drive more efficiency through the business as well. So we provide a little bit of segmentation and a bit more color on our numbers in this report as well. And to me, the exciting part of this is really the predictability in our revenue. So you can see our recurring revenue contributes to 93% of our revenue. So we've got very strong annuity revenue streams in the business that makes it much simpler for us to predict with confidence, I guess, how we deploy our capital and how we execute on our strategy. Our revenue by region on the right-hand side there, so you can see the UK's for FY22 contributed to 38% of our revenue mix, and Australia was 62%. So that has shifted slightly between 2021 to 2022. We think the UK will continue to grow. It's not going to grow exponentially faster than Australia, but we are well positioned in that market. We've invested in this particularly the last 2 quarters as well, with more capacity and capability in that market. So we would expect that mix to continue to shift over time as well. And then finally there, it's a revenue by type. So you can see there's sort of 4 revenue streams that we segment by. And I think that the key highlight on that is, while our managed services in FY22 may have been 54% versus 47% the previous year, some of our licensing fees are showing up as usage fees as customers move to part or full consumption-based pricing as well. And that 10% of revenue that's from usage fees there is at 100% gross margin. So it really does help drive that revenue mix and that gross profit expansion that we're very focused on as well. So here's a waterfall view of our ARR growth over the years. So you can see consistently we've been adding really consistent, solid recurring revenue quarter on quarter, and delivered 78% growth over FY21 to end the year at 16.4 million in ARR. And then our unit economics. So, like I mentioned earlier, this is really what's powering what we feel is the business model of XPON to get that operating leverage. Some of the key highlights on that, our revenue retention rate is 160%. Now that's up 50 percentage points from June 2021 to June last year, where it was 110%. So we've really demonstrated that, as we land customers, we don't churn those customers, and you can see that in our customer retention rate at 99.5%. But we're also able to expand those customers over time. That lifetime value of our customers at 667,000. That's continuing to increase as we increase the average revenue per customer. Our cost per acquisition is at 43,000. It takes us 8 months to get a payback on that acquisition cost, and that LTV to CAC ratio is at 16 times. So we feel, particularly that CAC payback period, we're very focused on keeping that under 12 months. And we feel that's going to help us continue to expand the business really profitably at a customer level. And then some key operating highlights. So throughout the year, we landed 32 new customers. And key point to note there is typically our customers are corporate and enterprise customers. So you can see there in the expansion piece there where we've expanded 34 customers, just the quality of the organisation that we're able to continue to grow alongside of as we demonstrate value, and then we continue to deploy the different technologies and different capabilities into that customer base. So these customers all have obviously a very big need for the solutions that we provide. They're also organisations that have plenty of scale. So the pricing point where XPON can sort of deliver value to them continues to expand as we continue to expand the number of products that those customers buy from us. So obviously it was a pivotal year for XPON. We listed on the ASX in December last year. We also did an acquisition and integrated Internetrics and our Artisan business into what's now XPON Technologies. We've maintained a very high net promoter score, greater than 80. I think the last quarterly results was 88, which is again very high benchmark. Our revenue retention rate, again, 160%. So just keep demonstrating that our customers are quite happy with the solutions and they see the value and they can continue to invest with XPON. And our Google Marketing Platform Partner Award. So we ran the best use case in the Australia-New Zealand region last year as well. And then on the people side, we continued to expand our sales and marketing capacity. We appointed a group CMO, Jennifer Klein, who started, I think, in October last year as well. And then we've continued to scale our delivery capacity and capability. So we ended the year with 135 headcount. And we also appointed a new global director of customer success and delivery, Nick Haskell, in the UK. So he started in July this year as well. Our Wondrous platform and the Wondrous ecosystem. So we've continued to innovate in our technology. We've been recognised as finalists in the ARN Awards. We achieved ISO certification for global information and security management, which is really important for our customers because the data that Wondrous is responsible for sort of housing and enriching and activating is very precious to our customers because it's information about their customers. And we've continued to integrate into that sort of global martech and adtech ecosystem with some integrations with Fivetran, which enabled more than 180 new data connections into the platform. And also we announced in Q4, Wondrous became a customer match upload partner with Google, which means Wondrous is now integrated into the user interface of the Google ad platform, which really starts to extend the reach of Wondrous into the millions of Google Ads customers worldwide as well. Very quick case study. This is just a really good example of the power of both our platforms as they work together. This is an example from University of the Sunshine Coast. They've been working with us on this specific solution for 3 years now. So when COVID hit in 2020, we launched their first virtual open day with their Holoscribe platform. We also enabled that with our Wondrous platform to collect all this really rich first-party data from people going in there and putting in their preferences, telling the university a little bit about themselves if they're a school leaver or a parent or a mature student. And then over the subsequent 3 years, the third year is just launched last week, actually, the third iteration of this. We've been able to continue to use that data, and the experience just continues to get better and better over time. And they're able to drive more and more results out of it. One of the key highlights there you can see on the screen is there's 3.7 times uplift in engagement, and we're measuring engagement by the number of pages per session. So, on average, someone will engage in 9.3 pages with inside this Holoscribe experience compared to 2.5 pages that they might on a static website for the University of the Sunshine Coast there as well. Another example of how a Holoscribe platform is really being used to make a difference. So Amnesty International has been a great client of XPON's for a number of years. They deployed Holoscribe when the unfortunate circumstances start to unfold in the Ukraine. And within a number of days, their team was able to get 360 immersive content on the ground in the Ukraine and publish that using Holoscribe to help bring awareness all around the world of actually what was happening on the ground in the Ukraine. So you can see there's a link on that slide there. I would encourage everyone to go and have a look and just see the sort of great work that Amnesty is doing there. And it's really pleasing that we can use some of our platforms for good in the world as well and really help get this message out of some of the atrocities that are going on there. So I mentioned our team's grown to 135 at the end of the year as we continue to expand our capacity. You can see that the global footprint is consistent with where we're focused in the UK, Australia, New Zealand, and our engineering and operating hub in Hanoi in Vietnam. And that Hanoi hub really does give us a number of scale advantages, particularly from a cost perspective, as we're able to attract some exceptional talent in Hanoi and do it in a much more cost-effective way than what we could either here or in the United Kingdom as well. And with our culture, and you can see there's a snapshot of some of our Vietnamese team there from Hanoi, where we had a recent offsite, and they're all holding some of our core value placards in their hands there. Throughout the year, we were certified with great places to work in all three regions, so Australia, the UK, and Vietnam. And you can see some of the results there, very, very strong results. 97% of our team agree that XPON is a great place to work. 96% of the team trust in the leadership team, and 92% have a sense of ownership and they feel very supported by XPON as well. So that's really key for us, is maintaining that very strong culture. It is unique and it is part of our secret sauce. And as we continue to scale, it's really important that we continue to not only maintain, but also enhance and build on that culture over time. So I might hand over to Leanne, our CFO, and she'll talk you through the financial results.
Thanks, Matt. Okay, for the profit and loss summary. So I am very pleased to report XPON has achieved revenue of 13.3 million for the year ended 30th June 2022. This represents 145% year-on-year growth, driven by an increase in organic growth and the full year contribution from Internetrics acquisition that was completed 5th of June 2021. The full year gross profit of $8.6 million, representing an increase of 169% year-on-year growth, with gross margin percentage of 65%, an increase of 6 percentage points year-on-year. The growths are driven by improvement in delivery and growth in high product margins such as usage fee revenue. The operating expenses was $14.8 million, including $1.9 million IPO-related expenses. Excluding IPO-related expenses, the full year operating expenses would be $12.9 million, an increase of 157% year-on-year. The increase was driven by the inclusion of Internetrics, as well as implementing the group's growth strategy, including investments in sales and marketing, product development, and delivery capacity. Matt, if you can turn to slide 25 for cash flow movement for me, please. Operating receipts of $12.3 million, representing cash conversion rate of 92% to reported revenue of $13.3 million. December 2021, the group successfully raised $12.5 million from the IPO, with $2.3 million costs related to the IPO. That gives a net proceed of $12.2 million from the IPO. Our operating payments of $16.4 million as the group continues to invest in sales and marketing, product development, and delivery capacity. The group also received $1.1 million from the pre-IPO funding with the issuance of convertible notes. And in the other cash items included $0.4 million being the final cash deferred consideration for Internetrics acquisition. The closing cash balance of $8.2 million will support the group targeting cash flow break-even for full year FY24. If you can please turn to slide 26 for the balance sheet. The cash and cash equivalent balance of $8.2 million, an increase of $6.5 million, representing 378% year-on-year growth, including net proceeds of IPO of $10.2 million. There is also a small borrowing balance of $0.1 million, being a loan from National Westminster Bank as part of the UK government's response to COVID-19. The balance of $0.7 million in contracted liabilities, representing payments received in advance from our customers, with revenue to be realized in FY23. So our balance sheet is very simple and almost no debt and strong cash balance that will position us to target the group's cash flow break-even full year for FY24. So I will now return you to Matt.
Thank you, Leanne. And so just to wrap up, just some highlights on our strategy and our focus around growth. So these are the 5 growth pillars that we've been focused on and we've sort of talked about since our IPO. So strengthening our existing solutions, and you can see that investment's really starting to pay off in our capability and in our product investments we're making. Expanding that value creation and product adoption from existing customers. So a very strong focus on customer success and net promoter score, along with our model of landing customers, meeting them where they are, deploying our technology incrementally and growing over the time as we expand. We've invested quite heavily in expanding our sales and marketing capacity, particularly in the last 2 quarters. We have been investing in this quarter in Q1. We expect Q1 to be the last of the heavy lifting as far as that expansion goes, and we should see that taper off and stabilize after Q2. Continue to drive those expansions through our channel relationships, and you've seen that manifest in things like that Google customer match upload, and continue to extend that Wondrous platform ecosystem and integrating with other vendors to make Wondrous a key component of an ecosystem for our customers. We've mentioned Fivetrans, we mentioned Google. There's been some new integrations with Shopify and HubSpot, and there's more integrations to come. And then our strategic priorities and focus. So we've mentioned on this call a number of times around, we want to maintain that organic growth momentum that we have while targeting cash flow break even for the full year for FY24. So we don't want to underinvest and cut off our growth, but we want to do it sustainably and sensibly. Continuing to invest in our product and build out that Wondrous product roadmap and continue to integrate that into the ecosystem. Continue to invest strategically in our people and our operations. So there's a number of projects we're focused on internally to really drive productivity and automation within the business as well. Continued focus on optimizing our product and customer mix to keep that gross margin expanding to hit that 70 to 80% target. Focusing on developing our sales and marketing capability and accelerate our pipeline and continue to land those new customers. Continue to increase that customer revenue retention and really demonstrate the success of our land and expand strategy. And then finally, working with partners and with channel and to continue to validate new customer segments for Wondrous in that product ecosystem. So that's all we had for today. So Jane, I might invite you back if you wanted to come back if there's any questions.
Terrific. Thanks, Matt. And thanks, Leanne. I can confirm we do have some questions. So I might just ask you to stop your screen share in a minute after everybody's taken note of your contact info. And I'll provide a reminder, if you would like to ask a question, use the Q&A function in the ribbon at the bottom of your screen. Thanks to those who've shipped some through already. So first question we have is, we were impressed with how you scaled the business in the second half, added significant headcount, but kept sequentially cost growth tightly dialed in. Without giving away all your secrets, what are the levers you have at your disposal to keep achieving this?
Yeah, so one of those key levers of growth is really trying to expand or shift that product mix so that we can expand without the need for human capital and further investment as well. So you'll see that through our usage fees because they're infinitely scalable, and also through our product licensing as well as we continue to drive more licensing sales inside of our customer base. And probably the third point there, and I mentioned this briefly as well, is our amazing team in Hanoi in Vietnam, like the world-class talent and very cost effective. So that gives us some leverage there to make sure that we can keep the costs contained as we continue to scale and serve our customers.
Great, thank you. Okay, question here. Hi, Matt and Leanne. Christian Angelis from CCZ Equities. 2 quick questions on the revenue growth. Circa 60% of the revenue growth delivered in FY22 has come from managed services. Can you dive into what managed services entails and how recurring it is in nature? Additionally, how much of the ARR growth is from managed services versus licenses and usage, and what is the margin on managed services?
Lots of different questions in that one. So I think there's some of that I can answer. Some of the segmentation around ARR and that we're not able to answer. But so I think one of the things with the managed services and the mix of growth there is really where customers are in the cycle, because as we're winning new customers, there is a higher, I guess, need to support those customers with the, what we call it strategic enablement, to really make sure they're getting the most value from our technology products. And if you think back to that slide that had all the different stops on the train stop there, some of those different solutions are more heavily skewed to need managed service support, and some of them are more heavily skewed to software and usage fee revenue. So it really just does depend on where we meet that customer, where they join us on what train stop, and then how we expand that customer over time. And we're really led by the customer there based on what their needs are and also their readiness to embrace some of this, because there is a lot of change that needs to happen inside of an organization to truly take advantage of this modern way of marketing and harness the power of the technology. And so, you know, we meet the customers where they are, and then we grow with them as they're ready to grow. So some of that's more probably reflective of where some of our customers are at in their journey.
Thanks, Matt. Okay, so question here around ARR. Where would you expect the annualized ARR to be sitting when you hit break-even point in FY24?
I can't answer that. It's a forecast by the sounds of it.
Yeah, okay. All right, so looks like you've committed to 70 to 80% gross margin target. What is driving your confidence to put that in writing now?
Well, it's something that we've disclosed multiple times, I think verbally. We feel very confident as we continue to shift that product mix to higher margin licensing and usage fees, that's going to continue to expand. And we're committed to hitting that number. So, you know, there was no real strategy behind it, but behind, you know, we've already disclosed that it's time to actually put it in writing and make sure we hit the numbers. Very
good. Reminder, if you'd like to ask a question, just drop it in using the Q&A function at the bottom of the screen. So you've made it very clear that you're targeting cash flow break even in FY24. Is that for the full year? And when do you think your cash balance is likely to bottom out before starting to lift?
Yeah, so that is for the full year for FY24. So just to be clear on that, it's not a run rate, it's a full year number. We would expect our cash balance to bottom out in the back end of the second half of this financial year, so back end of FY23, and then start to build from there.
Thanks. Okay, so on the UK, do you anticipate the UK continuing to grow? Are the dynamics in that market very different to what you're seeing in Australia?
Yeah, look, I think the dynamics are consistent. What we see is the UK is about double the size of the Australian market. So the opportunity there is obviously much bigger. The number of competitors is also bigger as well. I think based on the conversations we've had with our customers and in the market, and certainly with some of our partners at Google, we feel our offering is exactly where it needs to be for the UK market. I think the feedback's been very positive. We're getting a lot of traction with what we call our single customer offering. So that's embedding Wondrous inside of other solutions as well for our customers. So we feel confident that market will continue to grow. I think, like I mentioned a little bit earlier as well, like we invested in more capacity in sales and marketing team in 2 quarters ago, and this quarter just gone as well, so Q3, Q4. So as they start to get traction, those salespeople and their pipeline starts to convert, we're very confident that we'll start to see that continued growth flowing through in the UK.
Thank you. Okay, a related question. Is there scope for US expansion? Why or why not?
Yeah, it's certainly not on our immediate radar. I think we'll be customer-led around where we go as far as geographic expansion goes. We're very focused on, executing a really sustainable growth model that can help us grow the business really profitably over time. So for now, the US isn't part of our strategy.
Okay, one here on share-based payments. So what should we expect by way of share-based payments for FY23?
Do you want to answer that, Leanne? I'll mute there.
Sorry, you go ahead, Matt.
Okay. So look, I think there will be an increase in what we saw over FY23. We're still working through finalising the LTI program for the executive team, and we're looking to have that finalised before our AGM, which is in October this year. So yes, there'll be an increase, but not exactly sure exactly how much it is.
Thank you. Okay. Could you provide an update on how Wondrous is performing now that it's on the Google platform?
Yeah, look, I think what we've seen from the Google Ads integrations, we're certainly getting a lot of interest of people coming through. A lot of that because of the long sales cycle in Wondrous hasn't yet converted into new customers or new revenue. Certainly been very, very effective at validation for existing deals and existing customers that we have, where we can point to that, and it helps provide an external reference point as well for customers and for potential customers that are in our pipeline. We have seen a good marked uptick in traffic coming to the Wondrous website from that Google Ads user interface. So yeah, all the early signs are there. Probably just a bit too early to tell because of the sales cycle of that product as well.
Thanks, Matt. Okay, a question here clarifying a statement that was made earlier around cash and break even. So just to clarify, do you expect cash to trough at the end of this calendar year?
Financial year.
Financial year, FY23.
FY23.
Okay, terrific. All right, so final shout out for any questions that might be remaining out there in the crowd. Thank you once again to all those who have submitted questions so far. I know it's a busy morning for reporting, so we may let you all off with an early mark if there's nothing else that comes through in the next sort of minute or so. Okay. Well, Matt and Leanne, it's looking like we're fairly clear of questions now. It's been a great set there. So I might, at this stage, hand back to you, Matt, for closing remarks. Thank you.
Thank you, Jane, and thank you everyone for your time and interest in XPON. Obviously, we're just getting started, and hopefully this is the first of very, very many positive annual reports that we'll release to the market as we continue to execute on the strategy. So thank you.
Thank
Thanks,
you.
everyone.
Yeah.
Thanks, Leanne. Thanks, Matt. Thanks, everyone, for joining, and we look forward to keeping you across XPON's progress. I'll invite you all now to disconnect. Have a great day.